Today I have stock news on about two different stocks in which the direct institutional investors have increased their stake by 21% in the month of June. These are domestic institutional investors maintain their strong buying trend in the Indian equities market throughout the June 2025 month, with net inflows reaching 69,176 crores as of 27th of June. This marks the second highest in monthly inflow by DIIs in the year so far, reflecting a continued confidence in the market. On the 27th of June, the direct institutional investors turned net sellers, pulling out about 588 crore on the provisional data from the exchanges. However, this was a brief likely pause after a month of sustained buying. Among the many stocks that saw increase from the DIIs were Urgo Capital, market cap of 2042 crores. Stock moved up by 1%, 176 rupees on Friday. DIIs holding have grown to 2.65% from 0.8%, with an increase of 1.85% in March 2025 and a 0.1% in the month of June. So overall, you can see between the last 3 to 4 months, 1.85% jump in the company's shareholding value by the direct institutional investors. Urgo Capital, a non-deposit taking non-banking financial NC, NBFC, ND, is engaged in the business of lending and primary deals in financing for the MSME sector with a focus on healthcare, education, chemicals, food processing, FMCGs, hospitality, electric equipment and components, auto components, micro enterprises, and light engineering. Then the second company we have on the list is Biocon Limited, a market cap of 50,510 crores. Stock moved up 1.3% on the BSE, rising from 379 rising to 379 rupees. DII's holdings have grown from 21.45% in June to 21.45% in June, up 5.72% from the March quarter and 7% increase from 14 in the June 2024 quarter. So good growth there. Overall, in the last 1 year, you can say about 7.16% growth. Biocon Limited is engaged in the business of manufacturing of biotechnological products and research services. It is an innovation and global biopharmaceutical company committed to enhancing affordable access to complex therapies for chronic conditions like diabetes, cancer, and autoimmune diseases. Important disclaimer: this article information has been extracted from the different sources on the internet. All investment opinions and recommendations are mentioned by the respective experts, broking houses, rating agencies. These do not reflect any personal opinion or advice. Stock market investments carry inherent risk of financial loss. Investors must exercise their own judgment and conduct proper due diligence. The author bears no responsibility for any losses resulting from the decisions made based on this article. It is strongly recommended to consult a qualified financial advisor or broker before making any investment decisions. So we'll look at the financial of both these companies. One is Biocon and the other one is Urgo Capital. So, okay, let us look at sorry, Urgo. Sorry. You can see this in the current price of the stock, 179 rupees, up 2.5% today, 2% in the last 1 month, negative 21% in the last 6 months, and a negative of 33% in the last 1 year. So this is the logo of the company. Look at some of the details. Urgo Capital is a technology-focused, data-centric, and technology-enabled approach. Small business lending platform. The company is based on addressing the capital needs of the small business operating in a select 8 sectors by providing customized loan solutions. 2095 crore cap. 180 is the current price. Price to earnings ratio of 14.5. Book value 174. So the stock is trading almost the same price as its book value. Return on capital employed 11, return on equity 8%. Company expected to give good good quarter profit. Company has delivered good net profit worth 49% in the CAGR over the last 5 years. Reporting profits but no dividend paid, has a low interest coverage ratio. Promoter holding is low, 2.25%, which is very low indeed. Company has a low return on equity of 7.71 over the last 3 years. So the low holding of 2.25% is a big dent in investor or public confidence, which means that the promoters do not have any faith in their own company, and that is the reason why it can be in a negative zone, oversold zone, highly volatile in price and highly volatile in terms of quantities of stocks traded on the exchanges. You can see marginal growth in revenue, almost 10% every quarter, which is a good sign. Though the net profit hasn't grown accordingly, you can see about an average of uh, last quarter, last 2 quarters, just about 8 to 9% net profit growth. So that is something that the company would need to be looking at. Overall, 28% revenue growth in the last 1 year, and net profit growth of about 25, about 12%. Sorry, 12, 21%. That's right. Yeah. So this is it. We'll look at the other company now, Biocon Limited. There is a current price 380 rupees, 13% return in the last 1 month, 6% return in the last 6 months, 5% return in the last 1 year. So this is the logo of the company. 50,000 crore market cap, price of 380, price to earnings ratio of 53, which is very high. Book value 180 rupees, so company is trading at 2.1 times its book value. Then dividend yield of 0.13%, return on capital employed 6%, face value 5 rupees. Promoter holding has decreased by 6% in the last 1 quarter, which is not a good news. Company has a low return on equity, 5% in the last 3 years, capitalizing interest costs. Other income of 1,305 crores. Working capital days have increased by from 55 to 78 days. You can see about 20% revenue growth. No, sorry, 17% revenue growth. Net profit has gone up uh, drastically, however, still far away from the estimates of the June quarter. On a year-to-year basis, you can see marginal sort of revenue growth in the year, and about 10% net profit growth in the last 1 year. So that is seems to be decent. However, the revenue hasn't grown much, which is the reason why it could be something that the company would need to keep a track of. So friends, thank you for watching the video. Please share this video with your friends, family and associates so they could benefit from this information. Wish you a happy weekend, and please share your valuable feedback in terms of improving the content and the presentation of this information. Thank you once again. Have a lovely weekend.